In the business report, new Bank of Jamaica Governor Dr. Brian Langren on Thursday explained the decision of the Monetary Policy Committee to hold the policy rate at 5.5%. The governor explained, quote, "The committee also agreed to remain proactive in preserving relative stability in the foreign exchange market. This decision reflects the MPC's assessment that the recent rise in inflation is being driven primarily by temporary, external, and administrative factors, while domestic conditions remain broadly stable. Holding the policy rate steady at this time is therefore consistent with the bank's mandate, but it does not mean the bank is standing still." End quote. The headline inflation increased to 7.5% in July, up from 6.7% in June. Dr. Langren said the MPC expects inflation to remain above the 4 to 6% target range during the September quarter, before falling in the target range in the near term. President of the Small Business Association of Jamaica, Garnet Reed, has reached out to the new governor of the Bank of Jamaica, Dr. Brian Langren, to get commercial banks to reduce interest rates. Mr. Reed says members of the small business sector are struggling under the current high interest rate regime. He said commercial banks are lending to members of the SBAJ at an average rate of between 15% and 18% per annum, adding that these rates are unaffordable to small businesses that have no other option. For the latest market updates, here's Denise Williams.
For the trading period of August 21, 2026, the most actively traded securities were Sagicor Select Funds Limited Financial with 4,226,167 units, representing 16.26% of market sales. Wigton Energy Limited with 3,429,516 units, representing 13.2% of market sales. Trans-Jamaica Highway Limited shares with 3,278,348 units, representing 12.62% of market sales. Investor activity remained concentrated in distribution and transportation plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for August 21, 2026. Foreign exchange traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $159.39 and buying at $157.84. The Canadian dollar had moderate gains, supported by $1.02 transaction spreads. The Canadian dollar sold for $115.17 and was bought for $114.69. The British pound saw continued volatility, offering short-term trading opportunities of $3.67 in profits for the bank. The British pound sold for $215.34 and was bought for $211.67. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, can professional development debt help or hurt your credit? Let's say that debt isn't automatically bad. For professionals, borrowing to acquire certification, executive training, or specialized business skill can be an investment in future earning power. Today, many business coaches and training schools offer payment plans ranging from 6 weeks to 36 months, sometimes at 0% interest. There are also traditional interest-bearing education loans. But before signing up, look beyond the interest rate. So what happens to your credit? It depends on how the financing is structured. So ask, does the provider report the account to the credit bureau? Will there be a hard credit inquiry? Are on-time payments reported? Are late payments reported? Is this a loan or simply a payment arrangement? If the account is reported, consistent on-time payments can contribute to a stronger credit profile. Missed or late payments can hurt it. And remember, a 0% payment plan can still affect your finances because it creates a monthly obligation. So the bigger issue is, can the investment pay for itself? A $10,000 professional program isn't necessarily expensive if it helps you generate an additional $30,000 in income. But $10,000 is expensive if you finish the program with the same income, additional monthly payments, and no clear way to monetize the new skill. So before taking professional development debt, ask, what am I buying? How will it increase my earning power? How quickly can I monetize it? Can I make payments if the expected income doesn't materialize? So professional development debt can be a financial lever or a financial burden. The difference is whether the education produces an economic return. And that's today's business report. I'm Denise Williams. Until next time, stay informed, stay intentional, and keep building forward. See you soon.